Do you own a home? Have you ever wondered when it might make sense for you to refinance? Hello, Central Oregon. Eric Pashia here with HomeSource of Neighbor Impact, and today I'll be talking with Neighbor Impact's Director of Lending, John Cox, to better understand if and when you should think about refinancing. John is the Director of Lending with us here at Neighbor Impact, where he helps first-time and existing homeowners understand their options when it comes to buying their first home or living in their current home. In total, John has been in the real estate industry for over 30 years, serving as a bank branch manager, a real estate appraiser, among other things. A fun fact about John is that he's been in the real estate business since the year that I was born. How about that? John, thanks for joining us here today.
Sure. Thanks for having me, Eric.
Let's start here. So what does the refinance process look like, and how is it different from purchasing a home in the first place?
Well, basically, refinancing is getting a new mortgage to replace your original mortgage. Your process is somewhat similar to when you purchased your home for the first time. However, there isn't, the real estate agent involved in the exchange or for property. You're going to be required to provide a whole lot of paperwork that will help you qualify for this refinance, basically to see where you are from a financial standpoint and from an equity standpoint in your home. Generally, you're going to want to have similar or better financial information, and hopefully the value of your property has increased in well over time since your purchase or the last time you refinanced. So you're going to have to provide to your lender your income, your pay stubs. If you're W-2'd, you're going to probably have to pay for an appraisal, and you're going to go through that same lengthy process as you did when you purchased or did a prior refi. The process can take anywhere from 2 weeks to as long as 45 days sometimes. So what you're going to want to make sure about is that you are prepared for this and you have the documentation available for your processor in order to make it a smooth transaction.
I think that's a great thing that you've pointed out. So let's talk about this here. As a homeowner, when should I even be considering looking into refinancing?
Basically, when it allows you to obtain a better interest term and rate on your existing mortgage. The old rule of thumb was anywhere from, if you can better your rate from 1% to 2%, then that will kind of cover the costs and make it worthwhile. These days, however, it can happen that if you can improve your rate by about 0.5%, you should take interest and do the math, figure out what the upfront costs are on the loan, and calculate what the new rate and term is and what those payments would be, and understand what your monthly savings will be on that. That way you can decide whether or not it's worth your while or if you're just saving pennies on the dollar.
John, that's some great considerations there, and I'm sure that your lender is one of those people that can help you start to make that decision about when it's smart for me to refinance. So with that in mind, what kind of things, if I'm a homeowner, what kind of things should I be watching out for or be aware of when I decide to refinance?
I think most importantly, you should, contact someone that is referred to you, or do your research online. Maybe go through a direct lender, maybe a banker at the bank or credit union that you work for. Contacting your existing first mortgage lien holder, having a discussion about getting a better deal, and be aware of brokers or solicitors that kind of come out of the gate and say, oh, I can get you a better rate, I can lower your payment. Well, of course they can lower your payment, because let's say you've had your loan for 5 years or so and you've been paying on it. Well, now you only have 25 years left on your loan. And of course they can get you a lower payment because you're going to go back out to 30-year term. And so that just may not be in your favor. Even though you're lowering your rate, you may not necessarily be doing yourself any justice there.
So they're lowering your payment, but they're saying, hey, you've got to pay your loan for 5 years longer than you had originally. So maybe it's actually more costly over the life of both of those two different loans.
Exactly. So that's important as well. The other thing is to understand not just the rate that they're quoting you, but they need to be quoting you the APR, which is the annual percentage rate.
Now that's got the costs with the loan associated with that. That's why it's APR.
Exactly. And so the larger the difference between the rate and the annual percentage rate, the APR, is your cost. So if you have a 4% rate and a 4.25 APR, that means you're paying for that loan and you're paying costs associated with that loan. The closer that APR is to your actual rate is meaning that you're paying less and less of a fee. Now, it's usually in conjunction with your points or buying down or buying up a rate. So the first question I always ask people when they're refinancing is really, how long do you plan on staying in your house? And that can determine, what kind of favorable financing, you should get in the matter of structure, and having this discussion with your banker, your loan officer, or your mortgage broker. You're going to want to determine that and how that best fits your overall goal.
So this conversation may start with a mortgage broker or your lender, but you really need to look at your own personal situation and say, can I afford this? Is this going to be worth the fees that I'm paying to refinance in order to make the savings on the back end as I continue to pay off this loan?
Exactly. And it's also a personal preference too of your tolerance of risk. So if you feel that you want to save a little money in the short term and gamble a little bit, you can get a more favorable adjustable rate mortgage, as opposed to if you want to take a more conservative route, you're going to do a 30-year fixed rate. Loans right now are extremely favorable. They're at historic lows. There's something happening right now which is somewhat similar to what we would call an inverted yield curve, where short-term money is actually more expensive than long-term money. It flip-flops a little bit. Your 30-year mortgage is roughly around 3% right now at par, meaning no fees, no costs, maybe up to 3.25%. Where the 15-year loan is lower at, say, 2.85%. But what's interesting is the 20-year loan is higher than the 15-year loan right now. So it's kind of, things are kind of a little out of whack right now. But really what you've got to ask yourself is really, how much can I afford every month to pay? And if I could, can I refinance my 30-year loan, which is now at 25 years because I've been paying on it for 5 years. And maybe now with rates so low in the high twos on a 15-year loan, wow, maybe I can refinance into that term and get that better rate and have my home paid off in 15 years. You save a ton of money on interest if that's your approach.
And that can be the ticket for a lot of these homeowners. Some really good information there. Thank you, John. And also thank you for joining us here today and all the good that you're doing for our homeowners here in Central Oregon. It's been a pleasure having you.
Absolutely, Eric. Thank you.
In my extended conversation with John, he also wanted to point out that sometimes you might think about refinancing to consolidate some of your higher interest debt as well, and pointed out that by applying for a home equity line of credit, you may have access to do this. with your bank or your lender. As always, you can talk to one of our homeownership counselors here in HomeSource, or talk to a lender that you trust in order to help you make a good financial decision. If you want to learn more about how you can use your home as an asset building tool, join us for our home buyer education course, where we tackle what you can do to buy a home and what you can do to stay in that home on your terms and not anyone else's. This has been Pashia with HomeSource. Stay safe, stay healthy, and take care of yourself.